So, on any one day, you can look around the internet and find recent stories that say property prices are moving up and stories that say property prices are moving down. So, is someone pulling a fast one? No. Actually, they could both be telling the truth. And I'll show you how that's possible and how to spot it in this video after this intro. I'm Tim Hill, internet entrepreneur, property investor, and author of How to Really Buy a Property. No, it's not one of those books that goes on and on about how you can make millions investing in property, and all you have to do is go on my course to learn the secrets, and then you go on my course and you find out that you have to go on my master course to learn the real secrets. None of that. If you have decided to buy a property, no matter what your motivation, then How to Really Buy a Property is the smart way to do it. And it will save you time, money, and stress. Okay, it really all depends on the source that the media outlet is using. And there's two major sources that newspapers, magazines, websites will use. The first is Land Registry, and Land Registry records properties which have actually completed. It's not that an offer has been made and it's been accepted, it's that the offer has actually been fully completed, the transaction has gone through, and that property has definitely sold. So it's kind of definitive, it's real. It doesn't include all those transactions that failed, where the buyer pulled out or the seller pulled out. It's real data. Trouble is, to get to from the point where a sale has been agreed to the exchange of contracts and completion, usually takes about 3 months. It shouldn't, but it usually does. So those completions that Land Registry is recording and publishing, they're talking about what was going on in the property market 3, maybe 4 months ago. Okay, especially as the Land Registry only publish at the end of the month, plus a few days for them to process all the data. So they're publishing June's figures, but June's figures really relate to what was going on in the market back in, Easter, March, April time. So there's always a bit of a lag, and so they can be showing that property prices, for example, are going up. In June, they're saying property prices are going up because they're looking at the Easter figures. Now, Easter is traditionally a bit of a boom time in the property market. Properties are usually a bit more expensive. So what you're getting in June is a report by Land Registry saying property prices are on the up. Now, the other major source would be someone like Rightmove or another major property portal. But they publish asking prices. Now that's a bit more real time because those are properties which are on the market right now. But those are only the asking prices. They're not the prices that are actually being agreed. You can have a situation in a particular market, a local area, where properties generally sell for 10% below the asking price at a certain time. And so the asking price is highly misleading. We're going back to this June, July. It's a really good example because sellers who didn't sell at Easter, they're now moving into this quiet summer period. People, they're off on holiday, they're not looking for a property to buy. And if you want to sell, well, you might start thinking you're going to bring your price down a little bit. Okay. So then what you start to see is that places like Rightmove, they're reporting that prices are going down, and that's in June. But it doesn't mean that the actual figures that are being agreed are going down, especially since Easter. So you've got two quite faulty data sources, which are great sources, but they both have flaws. Now, you can also have a situation where you look too closely at an area. If you look at, say, property prices, average property prices in England and Wales, going back year by year for the last 20 years, you'll see a fairly trending up graph. It's got some dips in it now and again around the early 1990s, around the credit crisis of 2008, but generally property prices are going up. If you try to look at a particular postcode, say SW4, look at SW4, you see that the graph is just like that. It's all over the place because there's not enough data, there's not enough transactions to provide that kind of smooth trending of what's actually going on. Now, that's just classic fodder because you can find, say, in a particular postcode that it suddenly looks like property prices shot up 20%. Now, perhaps that's because a luxury development sold there during that month, and they sold, 20 flats that were all very expensive, much more expensive than the general average because they were luxury properties, but they're still just recorded as flats. And then, the next month they're all sold, and property prices move down again. Maybe they only moved down 10%, not 20%, but they moved down. This is great for media outlets because any property story is a good property sale, a good story seller. Okay, you publish a story saying property prices are going up. People are going to read it. People who don't own properties are going to read it because they're angry about it. People who do own properties are going to read it and go, oh, good, my property price, my property's worth more. Publish a story that says property prices are going down. Great, you're going to sell loads of newspapers because the first time buyers, they're going to be going, oh, great, things are moving in my direction. I should be able to get on the property ladder soon. And property owners are going, oh no, my beautiful asset, losing money. At that local level, the journalists have always got fodder for their stories. They could always say, and of course, what they love to do is say things like, they'll look at that SW4, that huge spike suddenly of 20%, and they'll go, ooh, SW4 is the new hotspot. Prices are rising at 20%. It just makes a story. They just take some data and they make a story. They don't look into it. They don't realize that there were a bunch of luxury flats that sold there. No, they just want the story, and that'll sell the newspapers. People will believe what they want to believe. So very easy to have conflicting stories going on. And from your point of view, there is no actual definitive data that can tell you right now in your area, is the market moving up or is the market moving down? It's absolutely pointless to say, the whole market, the UK market has moved down 5% last month. Therefore, I'm going to make an offer 5% below the asking price on that property if your area is actually moving up. Okay, and it's just the way it is with the UK. Some areas might move down, some areas will always be moving up. There's an average, it might be down, it might be up. But there's no way you can do it on a local level. You can go around, you can make your offers and just get nowhere. So don't expect to be able to go and look and find some kind of definitive answer for where you are and therefore what you should do. And remember, it's totally valid for different media outlets to be running different stories based on different data. If you ask me today to write a story about property prices rising, I could do it. I could find the data to support it. It could be a very well written article full of facts, graphs, figures. If you asked me to write an article saying the property market is going down, I could write the same very good article. Again, lots of facts, lots of sources, everything, no problem. And that's the quandary with it, really. So you're not going to get any definitive answers that way. What I do is I just generally ignore the chitter chatter, unless there's something major coming up, something major going on like the credit crisis in 2008. Then you could say, okay, we're going to a very rough patch. This will be a good time to buy properties and get a bit of a discount. You know that prices will be coming down. Don't think you can say, oh, I'll wait till the bottom. I know when the bottom is, because the bottom is never where you think it is. And before you know it, prices have moved back up. Since the credit crisis, the average price of a property in the UK is well above the place it was in 2008. The bottom of the market really only lasted for a few months, and we were back to where we were in almost no time at all. So there's nothing clever you can do about that, but you can get a vibe anyway for any particular area. As I say, always talk to estate agents. If you're going out viewing, meet the estate agent at their office, go to the property in their car, give you lots of time to chat, give you lots of time to get the vibe, lets them get their sales chatter out the way about how great everything is, and then, talking about their lives, what they're planning to do, these kind of things, they'll give you a kind of edge as to what's actually really going on in the market based on how confident they are in their personal lives in the future, about what, they're planning to do, how confident are they in their future income. So That's probably the best way that you can get some kind of vibe. Personally, you know, I don't claim to be any expert. I see property as a 10-year thing. So if I'm going to buy a property, I'm expected to hold on to it for at least 10 years. So the market might move up and down during that time, but generally it moves up. And I'll be looking to buy in areas which are safer. And that really means often around the southeast, unless there's an absolute bargain to be had somewhere else. Other parts of the country can become much more volatile through speculation. Stoke-on-Trent, classic example of one where the prices really got driven up before 2008. This kind of speculation about, oh, there's going to be a train line or things like that. It's going to be 5 minutes to get to London. And speculators just rushed in there, driving up the price. And when people realised it was all just a bit of a pipe dream, prices really collapsed pretty sharply there. So I'm looking for places which aren't seeing rapid rises based on promises, and where supply is going to be kind of limited anyway. So, you can say, oh, they're going to build a motorway spur into Middlesbrough and, it's going to regenerate the economy there. Great. But there are so many empty properties in Middlesbrough, so much supply that there's a lot of slack to be taken up. And so much slack to be taken up that there's going to be a long, long time, and there'll have to be a lot of improvement in the local economy before you're actually going to see prices start to rise substantially there. I'll give you a couple of examples from my portfolio. So I bought a flat once in an area where I thought, yeah, this area it's going to be up and coming. It's too close to good areas and to be ignored for much longer. And I bought a flat there, and it virtually doubled in value in the first 12 months. Absolutely extraordinary. Now, I didn't know that. I can go back and rewrite history, and I can say, yes, 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 this is my property strategy. I look for areas that are up and coming, and the property is going to double in the next 12 months. I don't know that. Nobody knows that. But you can get an idea, can't you, that if somewhere is, say, quite a rundown neighbourhood, but it's next to or it's surrounded by good neighbourhoods and the economy there is in fairly good shape, that this area is going to be brought up to the standard of the rest. Or if it's quite close to a city centre and the city is growing, then that wealth is going to expand out and areas are going to improve. You can pick up, I will make a different video about it, but you can pick up all sorts of things by walking around. You look at the standard of the properties, they all look run down. Look at the standard of the cars, and they all look quite good. Something doesn't add up here. There are a lot of wealthy people moving in. Won't be long. They've probably got quite nice flats in those rundown buildings. Won't be long before the buildings themselves get renovated. I bought a different property in a different area, which I was convinced would jump in value from day one. It was off plan, so I bought it, I think, 18 months before it was actually built and handed over. And I was just convinced. Now, as always, I see things with a 10-year, through a 10-year telescope. So I wasn't planning to sell it. I was planning to rent it out. But I just had this thing in my mind that it was really going to jump in value once it was actually completed. And, if I did want to sell it, 18 months later, it was worth exactly the same. There was no way that I could sell it for any more. The market wasn't having it. I rented it out. I think it was like 3 or 4 years went by and really nothing, maybe went up 10%, something like that. Now, if you take into account all the costs of buying and selling property, then that 10% in a smaller purchase really gets eaten up quite quickly. And so you walk away with having made nothing. You'd have been better to leave it in a bank and just get a little bit of interest on it. So, and then again, it probably was after 6 years, 7 years, suddenly it just jumped in value. It went from something like 270,000 to 370,000 without much of a kind of a reason why. There wasn't, You couldn't say, oh, it was because of that, or oh, it was because of that. And once they got to 370,000, later they announced that they were going to build this huge shopping centre just across the road. So one of the biggest shopping centres in London. And I thought, it's going to really jump in value again. Didn't. That's what the speculators tell you. Oh, look for that new shopping centre being built right next door. This is going to make this property really popular and drive up the price. It's those kind of things which sound like they make sense, which actually don't actually transpire into a real tangible price rise. So I'm generally saying that apart from the real obvious times when you can see that there's some kind of economic crisis going on, where property prices are obviously coming down, but in general, day-to-day times, when property prices seem to be steadily rising, then there is no way you can tell in your specific area if they're going up and down until you've really picked the brains properly of the local estate agents. And never rely on it. Never rely on the idea that, if I buy that property there, next year it's going to be worth 20% more. And if it isn't, I'm in real financial trouble. Okay. Think about it over 10 years. You're going to buy it. You're going to live in it. You're going to rent it out, whatever, for 10 years. And then you'll probably be safe. And generally, your property price will have gone up. Certainly, if you look at any of the records over the last decade, it's quite hard to find an area in Britain that over a 10-year period has gone down in value. Yes, you'll find places that have been fairly static. They might have dropped and gone back up, but not gone down. Again, like I said, think of supply and demand. If there's plenty of potential supply in an area, it's unlikely that those property prices are going to move up much. If you've got a restricted situation, like, say, Manchester city centre or Liverpool city centre, it's restricted. You can't add any more supply to that. And people want to live in that city centre. That's supply restricted. That's an area where demand could push properties up, push property prices up. But if you think about Manchester in general, there are so many areas in Manchester which are brownfield sites which could be regenerated into housing. There's a plentiful supply in the suburbs of Manchester. So you don't expect huge gains there. If you get them, great. But, that wouldn't be my particular buying strategy in terms of an investment. Perhaps in terms of a place to live, fine. And then you've got your expectations set out. So, like I said, talk to the estate agents, get through their chatter and bluster, get personal with them, and you'll probably find out much more about what's really going on in the property market in your area, regardless of what's going on nationally. That's all for this short video. There's much more information in the book, How to Really Buy a Property. As always, if you found this information useful, please remember to subscribe, to share, to like, to do all those social media things. It all helps other people who need this information find it more easily. If you've got some specific questions which you'd like me to have a go at answering, please put them in the comments below and I'll try and get to them. And in the meantime, good luck with your property purchase.